Now, as I mentioned, you're going to use those crummy letters. You're going to say that you made a gift to the trust, and then you're going to give the beneficiaries the opportunity to say, okay, I recognize that I can take it, but I'm not going to. Sign the letter, send it back to you. And now it's a fully completed gift. You can use your annual exclusion gifts, right? This is frequently also done every year when there's premium payments to make. What happens is the grantor will say, okay, I have a $20,000 premium to make on this policy. I'm going to make a $20,000 gift, probably a couple months prior to when the premium's due. We're going to send out those crummy letters, give the beneficiaries the opportunity to take it. They're not going to. They're going to sign it and say, nope, we're not going to take this money. Thanks for telling us, but we're not going to take it. And then the trustee now has this money, and the trustee is going to write the check for the premium, send it to the insurance company, and you're good. Okay. Now, why would you have this kind of trust? An ILIT is a great tool to, like I said, to provide liquidity to an estate to pay tax. If you have an estate where there's a lot of illiquid assets, maybe the estate owns a lot of real estate, or there are family-owned businesses, having life insurance is a great way to pay the estate tax right off the bat. So your family doesn't have to sell real estate. Your family doesn't have to have a fire sale and sell the business. They can still do those things and then have this liquidity to pay the tax. Or if you know there are debts too, or expenses for the family, even if there's no estate tax, it does provide a lot of relief immediately for the family to cover things like college or the mortgage or things like that when you have an unexpected death. In addition, life insurance is a great way to equalize your estates. Maybe you have a family-owned business and you have 3 kids, 2 of them in their business and 1 of them isn't. So maybe you're leaving your business to the 2 kids, but then this other kid doesn't really in the business. So you say, okay, the value is going to be approximately this. So I'm going to buy a life insurance policy for that kid. And then that's a way to equalize your estate. So there's lots of different options you can use. So current planning opportunities with an ILIT, since you have this huge exemption, $12,920,000 per person, now could be the time where maybe you're going to fund your life insurance trust for not only the premium for this year, but premiums for future years. So you don't have to make the gifts each year. You can just put a lump sum, put $1 million into the ILIT now, right? And then now you've got premiums in there for the next 10 years, or, depending upon what the premium is. So that's something. So before that tax exemption sunsets, maybe you want to, fund a few years premiums now. Okay.